The topic I want to touch upon today briefly is life insurance. Whether or not you should have life insurance, what kind of life insurance. My personal take on life insurance is that if someone is depending on you for their survival, for their income, for their expenses, then you should definitely have a life insurance policy taken out on you. So for example, if my spouse is necessary, his income, for me to support my standard of living, to pay the mortgage, to pay for kids' tuition, those sort of expenses, then absolutely I should get a life insurance policy insuring him. Now, should it be whole life or should it be a term policy? Of course, this is a question for your financial advisor, but I'll give you some parameters to consider. Term life insurance is much cheaper. It is very practical, it's very affordable, and it's something that's wonderful for that younger couple that, one is dependent on the other, or maybe both are dependent on one another, and they absolutely need that income, let's say until the children reach 18 years old, 25 years old. So you want to have, let's say, a 20-year term coverage, so that if that person passes away within that term, you will get that life insurance benefit. And you're sort of banking on never having to use that policy, because it's a parachute, and hopefully that you'll never need to use it, because you won't have to jump and get to that point. But in case that tragedy unfolds, you need to have that policy in place. Again, it's very affordable, and this is definitely something that most young couples who are dependent on one another's income, or one of them is dependent on the other's income, should absolutely inquire and be very proactive. Because in my practice, I see so much tragedy with young people, just things unexpected. People get sick, people get into accidents. There's so much that happens, and that is why getting a term policy is really, really important, very affordable. And I urge all of you who are in that position to reach out to a life insurance broker, do your research, and take this seriously. Whole life is much more expensive, but whole life policies are much more flexible. Well, first of all, they insure that individual for their entire life, right? Hence the term whole life. Second of all, they can be used as investment vehicles. You could borrow against them. Something very trendy and new that's happening is there are riders in these whole life policies that insure long-term care. So for example, let's say you have a whole life policy with a death benefit of $1 million. So there are riders that are added to those policies or issued with those policies that say that if you need long-term care, because long-term care is so expensive, and really nobody has long-term care insurance because Medicare doesn't cover long-term care, and long-term care insurance in and of itself is very expensive. And if you don't get it by the time you're 50, it's cost prohibitive. So you can use that whole life policy to cover long-term care for that period of time that you may need it, and the death benefit will diminish by that amount. It will convert into a whole life policy into a long-term policy, in the event that you need it. So that is something that's very advisable to look into as well. Thank you for listening. I hope you found this helpful. And for those of you who don't have any insurance, this is really time to take advantage, think about it, and be proactive.